Hey, Thomas Castelli back here for another episode of Tax Smart Q&A. And in this episode, I'm going to answer the question, what is the real estate professional status, also known as REPS, and how can you qualify as a real estate professional? All right, so if you've been following this channel for quite some time now, you already know that rental real estate is considered passive by default, and passive losses cannot offset taxes on your W-2 or active business income. However, if you qualify as a real estate professional, you can use the losses from your rental real estate to offset your W-2 or other active income. For example, let's say you have $50,000 in passive losses, right? And you're in the 24% tax bracket. Well, this $50,000 can offset your income and save you up to $12,000 in federal taxes, which can then be used to reinvest into your next rental property and continually grow your wealth. And this is the power of the real estate professional status. So before I break down how to qualify as a real estate professional, if you do like this video, go ahead and hit that like button to help get this video into the hands of more real estate investors and help them become tax smart. All right, so to qualify as a real estate professional, you must spend more than 750 hours and more than half of your total working time in a real property trader business. So if you work a full-time W-2 job or you're full-time in an active trader business that is not a real property trader business, it's going to be very challenging, if not impossible, for you to qualify to become a real estate professional. However, it might be possible for you to have your spouse qualify. And if you file a married filing joint return, you'll both be able to benefit from the real estate professional status. Well, so what is a real property trader business? And a real property trader business is going to be real property development, redevelopment, construction, reconstruction, acquisition, conversion, rental operation, management, leasing, or brokerage. So that means that brokerage includes real estate agents, just in case you were wondering. All right. Now, if you're able to, if you're able to spend more than 750 hours and more than half of your total working time in one of these real property trades or businesses, then you'll be considered a real estate professional. Oh, and one more thing before I move on, you must own at least 5% of the real property trader business that you are working in order to count your time towards that 750 hours and more than half your total working time test. If you were own less than 5%, then that time simply will not count. However, the story does not end there. Even though you might be considered a real estate professional, in order to take the losses from your rental properties against your active income, you must also prove that you materially participated in your rental activities. Now, if your rental properties is your sole real property trader business, you don't have any others, chances are you already met this requirement by getting to 750 and more than half your total working time. If you did that, you're in the clear. However, if you're working in other businesses, maybe you're an agent, you fix and flip properties, maybe you're construction, or maybe you develop properties, well, then you're going to need to meet one of the 7 material participation tests on your rental properties. That's all for today, but if you want to learn more about the 7 material participation tests, be sure to grab our free real estate professional guide by clicking the link in the description to this video. And if you want to catch more tax smart videos, be sure to subscribe to the channel so you don't miss out on future releases. That's all for today, and we'll catch you on the next episode of Tax Smart Q&A.